Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from Mara Holdings, and trust me, it's not as boring as it sounds. Think of it as corporate speed dating. They're looking for some quick cash. We're looking at a Form 8K, which is basically a company saying, hey, something important just happened. In this case, the something important is a big money move that could change the game for them. This report was filed in late March of 2025, so it's pretty fresh. The earliest event in this report happened on March 28, 2025. Keep that date in mind. It's when all the action started. This report is about Mara Holdings Inc. They're registered in Nevada and have a file number 001-36555 if you want to look them up. Here's the core of the report. Mara Holdings has entered into an at-the-market offering agreement. That is a fancy way of saying they're going to sell shares of their stock, little by little, whenever they think is a good time. Basically, Mara Holdings can sell shares when they need money and when they think the price is right. This agreement is with a bunch of agents. Think of them as brokers or salespeople who will help them sell these shares. The big number here is $2 billion. That's how much money they could potentially raise by selling these shares. It's a pretty big deal. This sale of shares follows what they announced earlier in February 2024. This offering is tied to a previous filing, something called a Form S-3 ASR. It's like getting permission from the SEC, the government body overseeing such sales, to sell shares over time. The agents are going to try their best to sell the shares, but they're not required to. They'll get a commission, which is like a cut of the sales. The agents could get up to 3% of the money made from selling these shares. So if they sell all $2 billion worth, the agents could make up to $60 million. Now here's a twist. Mara Holdings is cancelling a previous agreement they had with another company, HG, Wainwright & Co. from back in October 2023. They had planned to sell up to $1.5 billion worth of stock with HG Wainwright, but now that's off. So why cancel the old agreement? It seems like they wanted a new deal with different agents, potentially for better terms or more flexibility. This is basically saying, hey, we're making predictions, but things could change. The company is warning everyone that the future is uncertain and what they expect to happen might not actually happen. If you want to know more about what could go wrong, they point you to the risk factors section of their annual report. Every company has risks that could stop them from doing well. This part lists the documents attached to the report. If you're really interested, you can find the full agreement and legal opinions there. Alright, let's break this down. Mara Holdings is essentially opening the door to sell a ton of their stock. They're hoping to raise a lot of money, up to $2 billion. They've switched partners to do it, and they're warning everyone that things might not go as planned. Why are they doing this, and what does it mean? From what I see, this move is all about getting cash. Companies usually do this for a few reasons. Maybe they want to invest in new projects, pay down debt, or just have more money in the bank. The risks are obvious though. When a company creates more stock, each share is worth less. That can make existing investors unhappy. What I think this means for Mara Holdings is this. They see an opportunity to grow, but they need money to do it. The fact that they're willing to sell so much stock suggests they're either very ambitious or maybe a bit desperate for funds. Either way, it can have advantages and disadvantages. Overall, Mara Holdings is making a bold move. Whether it pays off or not remains to be seen, but it's definitely something to keep an eye on. The fact they cancelled their previous ATM agreement suggests the new one has better potential turns for them. That or their partnership wasn't ideal. This new deal opens a lot of opportunities for the company, but at the same time could devalue their shares if they aren't careful. Thanks for watching. If you found this breakdown helpful, please hit the like button, leave a comment, and subscribe for more corporate deep dives. See you in the next video.